Hey there, welcome back to my channel, it's me, the Mind Injector. Now, imagine this. The ground beneath one of the tech giants is trembling, and it's not due to an earthquake. It's a seismic shift in the US Army's relationship with Palantir. In this video, we're diving deep into the Palantir Stock CRISIS. Is the US Army breaking up with Palantir? Stick around because the revelations are shocking, and the implications for Palantir's future are massive. But before we unravel this, do me a favor. Hit that like button, subscribe if you haven't already, and get ready for a ride into the uncertain territories of the tech universe. A recent presentation by the US Army has set the tech world abuzz with uncertainty. The Army, during an industry event at Fort Belvoir, Virginia, didn't just outline plans. They hinted at a seismic shift in their relationship with Palantir, the tech behemoth that's been the prime contractor for the Army data platform. But what exactly was said? The Army's concerns are like a storm gathering on the horizon. They're worried about data ownership, specifically in the context of Palantir's commercial licensing IP model. It's like a chess game, and the Army wants to make sure that the pieces, read data, remain on their side of the board. This is a unique challenge, a clash of data ownership philosophies that could reshape the entire landscape. Let's dissect this. Palantir's business model revolves around the commercial licensing IP model. Now, what does that mean? It means they own certain rights to the data generated by their platform. But here's where the plot thickens. The Army wants none of that. They want to ensure that every byte, every bit of data generated by them remains theirs and doesn't become Palantir's proprietary treasure. Why is this a big deal? It's because the Army is not just another client for Palantir. It's a major chunk of their revenue. And when the Army speaks, it's not just a conversation. It's a potential earthquake in the business landscape. Now, let's talk strategy. The tone of the comments made by the Army officials during the presentation wasn't just caution. It was a potential reshuffling of the deck. They are eyeing more open source vendors, a move that's akin to inviting new players to the chessboard. Why? Well, it's a strategy to dilute the dependence on Palantir and perhaps set the stage for a new era in data management. The clues in the presentation suggest that Palantir's contract, up for renewal in 2 weeks, might not be a smooth rollover. The initial $458 million agreement could see a significant reduction. This isn't just a storm in a teacup, it's a potential hurricane reshaping the dynamics of the Army's data ecosystem. Now, let's talk numbers. The language of Wall Street. Analysts, the weather forecasters of the stock market, are painting a gloomy picture for Palantir shares. The whispers are turning into shouts, with a projected decrease in value of around 18% over the next year. The average target price is hovering at $15.18, reflecting the pessimistic outlook. And here's the consensus rating. Hold. It's not a resounding buy or an outright sell. It's a cautious hold, reflecting the uncertainty in the air. The stock market, my friends, is a place where whispers can turn into storms. So, how is Palantir responding to this storm? Well, as of now, we're in the eye of it. The uncertainty surrounding the future of Palantir is palpable, and investors are advised to fasten their seatbelts. Palantir will need more than just tech prowess to navigate the storm. It will need strategic acumen and perhaps a pivot in its business model. This isn't just about numbers on a stock chart, it's about the future of a tech giant. As the contract renewal hangs in the balance, Palantir's moves in the coming weeks will be scrutinized like never before. Will they weather the storm and emerge stronger, or will this be the beginning of a turbulent phase for the tech giant? Buckle up, because the ride just got a lot more interesting. Now, let's shift gears and talk about Palantir's recent performance in the stock market. The saga unfolds like a symphony, with ups and downs creating a unique melody. After concerns raised by analysts at William Blair, Palantir stock took a hit. The potential non-renewal of the contract with the US Army loomed large, and investors responded with caution. The stock price danced on a tightrope, influenced not just by Palantir's performance, but by the broader market sentiments. However, it's not all somber notes in this symphony. Palantir, known for its data analytics and surveillance services to government agencies, has been diversifying its tune. The private sector is becoming a new stage for Palantir, and collaborations across industries are creating a harmonious melody of growth. Let's talk about the sparks in this symphony. William Blair analyst Louis De Palma played a key role in this recent downturn. His note suggested that the renewal contract, initially a hefty $458 million deal, might see a significant reduction. A new 2-year renewal for $116 million, with additional vendors sharing the deal. This speculation added a sharp note to the symphony. De Palma also speculated on issues related to data ownership, hinting at Palantir's intention to use customer data to train AI models. It's not just about the contract amount, it's about the data, the lifeblood of Palantir's operations. As we dive deeper into the symphony of Palantir stock, it's crucial to know the market dynamics. The stock experienced a minor increase post the William Blair note, but the real roller coaster happened on November 21st. The stock pulled back after Palantir's software contract with the UK's National Health Service was lower than expected. It's like hitting a sudden low note in a crescendo. Despite the retreat, Palantir stock shows resilience. With a 190% increase for 2023, it's been a roller coaster ride with highs and lows, twists and turns. Palantir's expansion into healthcare, energy and manufacturing sectors adds new layers to this musical journey. Now, let's switch gears and talk about the financial symphony. Total revenue for the past year, a staggering $1.91 billion, a 23.61% increase compared to the previous year. In the most recent quarter, the company generated $558.16 million in total revenue, a 4.66% increase since the previous quarter. It's like hitting high notes in the financial charts. But here's the crescendo: net income. Palantir reported a net loss of $373.70 million over the past year. However, in the third quarter of 2023, the company achieved a net income of $71.50 million. That's a 154.22% increase since the previous quarter, and a substantial improvement from the previous year. The financial symphony is hitting new heights. Before we get into the exciting details, let me introduce you to Moomoo Financial. If you open a brokerage account with Moomoo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So sign up now using the link in the description and get those free stocks. Now let's get back to the video. Now let's talk about the overture, the options market. As of December 5, 2023, the options market is like the opening act, setting the stage for investor sentiments. The mix of bullish and bearish sentiments among well-funded investors is intriguing. Approximately 50% of these investors have taken a bullish stance, while the remaining 50% have adopted a bearish outlook. The options market has been buzzing with activities related to Palantir Technologies. Put options valued over $300,000 and call options worth over $2 million indicate the significant attention Palantir is receiving. Market movers are closely monitoring a price range for Palantir that spans from $10 to $26. This range, observed over the past 3 months, reflects the market's perception of the company's value. Now, let's talk about the most recent movement in the symphony: Palantir's stock performance on December 4, 2023. The stock faced a decrease of 9.77%, opening at $19.77, 15 cents lower than its previous close. The drop in price has raised concerns, and investors are keeping a close watch. Despite this, Palantir is trading near the top of its 52-week range, indicating recent strong performance. It's also trading above its 200-day simple moving average, suggesting a positive trend over the long term. But the drop on December 4th raises questions about the sustainability of this positive momentum. In conclusion, Palantir is navigating a symphony of uncertainty. The US Army's potential breakup, the performance in the stock market, and the financial symphony, all elements are in play. Palantir's moves in the coming weeks will be crucial, and investors are advised to brace for impact. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.